If you're running a GST-registered business, you know the financial year isn't really over until that annual return is filed. So today, we are going to demystify the GSTR-9 for the 2024-25 financial year. And to make sure we get this absolutely right, this entire guide has been prepared by the expert himself, CA Morley Kumar. Let's dive right in.
You know, to really get the spirit behind this annual return, this quote from the Institute of Chartered Accountants Guide is just perfect. It's a great reminder that the GST system isn't static, it's always evolving. And the GSTR-9, well, it's a huge part of that. It's that final checkpoint to make sure everything for the year lines up just as it should.
So, let's break it down. What is GSTR-9 in plain English? Honestly, the best way to think about it is like a final report card for your business's GST journey over the year. It's that one single document where you pull together everything you've already filed in your monthly or quarterly returns. And, maybe most importantly, it's your last official chance to spot and fix any errors and get your books perfectly squared away for the year. Okay, so here's our game plan for today. We're going to start with the absolute basics of GSTR-9. Then, we'll jump into the really critical parts: how to declare your sales, how to reconcile all your tax credits, and what to do about corrections from past transactions. And finally, we'll wrap up with the deadlines and penalties you definitely need to know about.
First things first, let's lay a solid foundation. What exactly is this form? And maybe more to the point, who needs to be worried about filing it?
So GSTR-9 is the official big-picture summary of your entire financial year under GST. It scoops up all the data from your regular returns, all your sales, your purchases, every bit of input tax credit you've claimed, and of course, the taxes you've paid. It's basically the government's comprehensive final look at your year in business. So who's on the hook for this? Well, the short answer is pretty much all GST-registered persons. But, and this is a big but, there are some important exceptions. You're off the hook if you're an input service distributor, someone who deals with TDS or TCS, or a casual or non-resident taxpayer. And here's the one that affects a lot of people. If your total turnover for the year is up to 2 crore rupees, you are also exempt. All right, now we're getting into the real nitty-gritty of the form, starting with how you report all the sales your business made. This is where you declare your total supplies, and it all happens in a section called Table 4. Table 4 is all about sorting your sales on which you've paid tax. The whole idea is to separate your transactions based on who you sold to. So you have to split up your business to consumer, or B2C sales, that's your regular customers, from your business to business, or B2B sales, to other GST-registered companies. Then you get into the special stuff like exports. And that last bit, 4G, that's for inward supplies where you had to pay the tax under the reverse charge mechanism, which we'll look at right now. This flowchart is a great way to see how that reverse charge liability actually works. Here's the key thing to remember. Even if you physically paid the tax in the next financial year, the liability itself belongs to the 2024-25 period. That means it absolutely has to be declared in this year's Table 4. It's all about matching the liability to the right year. Okay, next up is one of the most crucial parts of this whole process: accounting for your input tax credit, or ITC. This is all done in Part 3, and the star of the show here is Table 6. This is where you have to reconcile every single tax credit you've claimed all year long. Just looking at the structure of Table 6, you can see why it's so important. The government needs this level of detail to make sure all the input tax credit you've claimed is legit. It's built to capture credit from basically every possible source, whether it's from your regular purchases, imports, or those reverse charge deals.
Now, your starting point for this whole section is Table 6A. This number is automatically pulled in. It's the grand total of all the ITC you claimed in your GSTR-3B returns throughout the year. And here's the part you really need to hear. This field is locked. You cannot edit it. It's the baseline number that everything else you report has to match up with. So your main job here is to take that big total from 6A and break it down into the right categories. In Table 6B, you have to split out the ITC from your normal B2B purchases into 3 buckets: inputs, input services, and capital goods. Then, over in Tables 6C and 6D, you report the ITC that came from the reverse charge mechanism. Getting the split right is absolutely essential for an accurate return. But what if you find a mistake from last year after you've already closed the books? We've all been there, right? Well, that is exactly what Part 5 is for. It gives you a specific way to declare any amendments or transactions from FY 2024-25 that you only manage to correct in the next financial year's returns.
The process itself is pretty straightforward. First, you find a missed or wrong transaction from FY 2024-25. Second, you report it and pay any tax due in a later return, say in May of 2025. The final and most critical step is to then declare that specific correction in Table 10 or 11 of your GSTR-9 for FY 2024-25. This makes sure that transaction is officially tied to the correct year.
So, after all that detail, why does getting it right matter so much? Let's talk about the bottom line, the non-negotiable deadlines for filing and the financial pain that comes with getting it wrong or being late. Okay, let's be crystal clear on this. Get your calendar out. The due date to file your GSTR-9 annual return for the financial year that ends on March 31st, 2025 is December 31st, 2025. This is a hard deadline, and you really don't want to miss it.
And if you do miss that deadline, here's what you're looking at. The late fee structure has been streamlined, which is good news, because the penalty is now directly linked to your business's turnover. As you can see, the daily fee climbs for bigger businesses, starting at 50 rupees and going up to 200. The maximum penalty is also capped as a percentage of your turnover, which helps make sure the penalty fits the size of the business.
When it's all said and done, filing your GSTR-9 accurately and on time isn't just about dodging penalties. It's about taking that final opportunity to self-correct. It's about protecting the financial integrity of your business and closing out the year with total confidence in your compliance. So the real question is, are you ready?